I'm Owen Bigland. This is the Inside Edge video blog. Okay, it's Saturday. Let's do a quick investing blog, the ones I really like doing a lot. Answer a few questions that people have sent me here lately on portfolio and my investing and everything else here. So want to give you guys a couple of plugs here. If you're not following me on Twitter, I'm not all that active on Twitter. I've got a couple thousand followers on there, which I appreciate. And I tweet maybe 5 or 6 things every week. But I've been tweeting some stuff on the books I'm going to be reading for the COVID winter. I've set a goal for myself this year. I always try and read a lot, but I've set a goal to try and read 50 books in 2021. It's a lofty goal. I don't know if I'm going to make it. I like to try and set my goals high and then go from there. You know, gee, I haven't taken a real vacation at all for the last year, and I'm not planning on going anywhere here until late spring or early summer with COVID. I tell you, I don't talk a lot about my work load and everything else, but I tell you, 2020 was a record year for me. 2021 is looking like it's going to be crazy. Tons of listings, tons of buying clients. I'm busy, but if I'm able to get some vacation time in, I'm hoping we get this quarantine done and I can take a little bit of time off this summer. I can probably knock off 8 or 9 books when I'm on a couple of vacations. But I posted some of the books that I'm going to be reading this winter. A lot of them are newer reads. Some of them I'm rereading from my library because I always like to revisit some of my favorite books that I haven't read in 3 or 4 years. So I posted photos of a lot of those books. I've got a couple more updates I'm going to do because I've got a pile of books on order right now from Amazon. But I'm going to give you guys go to my Twitter feed and you can pick up all the books there that I'm currently reading. A couple I'm going to give plugs to. This one, The Psychology of Money by Morgan Housel. Incredible book. Buy it. One of the best business books. I'm not quite finished it yet. I'm 3/4 of the way through, but I can tell you already, one of the better business books I've read in a long time. The thing I like about this book, it's a big seller on, I think it's a top seller on New York Times right now. Keeps it simple. It's a simple book, easy to understand. That's what investing is all about. Don't complicate things. Buy good quality companies, hang on to the damn things, collect the dividends, keep reinvesting it, let time and compounding do its thing. Another one, Picking Winners. Go to my Twitter feed, it'll be on there for you. You can look it up, buy all these on Amazon. So the common threads that I've been reading in a lot of these investing books lately, these are brand new books. It just came out in the last couple of months. They're going back to basics, which is what I love. I've been pounding this home for 10 years on my blog here, and I'm glad to see that there's a whole pile of new books that are coming out now telling you the same thing. Keep it simple. Buy indexes, buy the S&P 500, buy the Dow, buy the TSX, buy the QQQ NASDAQ. That'll do the trick for most of you. Keep your fees low and then just sit on your hands. Don't dabble with it. It talks about Warren Buffett. He became a billionaire, I think, when he was like 52. And then in the next 30 years, he was worth 70 or 80 billion dollars. It's that first million that's the tough part. And it's the 8th wonder of the world, compounding. Give you some numbers from this Morgan Housel book here, and it's filled with a whole bunch of these things. If an investor invested $10,000 in 1980, and if he missed the top 5 days of the year over the next 40 years, so he invested in 1980 to 2020, put in $10,000. If he eliminated the best 5 days of the year, just 5 days over the last 40, his portfolio would be worth 38% less than what the guy who just put the money in and sat on his hands for 40 years. And I have seen these type of numbers, all kinds of stories like this. And this is what investing is about. The key with these books is buying good quality companies, holding on to them. Don't churn your portfolio. Keep your commissions low. Keep your trading costs low. And let compounding do all the heavy lifting. And this is the exact same thing with real estate that I've been pounding home to. Just buy your principal residence, enjoy it, keep it. Down the road, buy an investment property, put a tenant in it, let the tenant do all the heavy lifting. Don't look at the BC assessed values, don't look at the MLS if it bothers you, and have a look at it in 20 or 25 years, and you're going to be blown away with the results. But I'm really starting to see, it's nice to see these back to basic books like Morgan Housel's. So much of this, as you'll see, is what I've been doing on the psychology, the mindset you need to have. Don't try and outsmart a market. Don't trade. It's a recipe for disaster. You're not smarter than the Wall Street guys. You know, even the best hedge fund managers and private equity guys, they're right about 55% of the time. 55% of the time they're right on their stock picks. The other thing I always throw out there, which I know a lot of you are aware of, you know, stock pickers, 85-90% of them cannot even beat the index. The 10% or so that do might do it for 1 year, but they cannot consistently beat the index. It's like trying to chase a carrot on a stick. So don't do it. Avoid that. Just buy, index invest, buy high quality companies that spin off a dividend preferably, and just go from there. If you want to buy some growth stuff, and I'm going to do more blogs on this later this winter, on portfolio construction and kind of what I buy, the difference, the mix I have between dividend payers, ones that slowly grow, maybe they're not huge growers, compared to some of my growth names. Because I've got both. But a lot of it depends on your age, your net worth, and everything else. But I'll do another blog on that down the road. You know, in 2021, I see, you know, the market's probably still being pretty strong. I am expecting pullbacks. We are always going to get them, so be prepared for them. You know, we're still in COVID. Don't be surprised we're going to get some bad news on the vaccine front. Some people are unfortunately probably going to die of the vaccine. It won't get rolled out properly. We're still going to be in lockdown mode for a while. There'll be plenty of good buying windows. I would pounce on them when you get them. If you see a 5 or 10% correction in the S&P 500 or the TSX, or Apple drops 10%, or Amazon, if you've got some spare powder, probably buy and just hang on to them. But again, for most people, index investing is all you're going to need. Low-cost ETFs. Down the road, after you've got about 250K, I think, in your portfolio, and you want to start buying some individual stocks, and you enjoy the process of analyzing companies, buying them, then go ahead, buy some individual stock, but not until you've got a good foundation set up in index investing, in my opinion. But follow me on Twitter. I'm going to post some of the books I'm buying now. I really like this Morgan Housel book. You know, you'll recognize some stuff from my book in here. Remember, I was 5 years ahead of Morgan, and you'll notice a lot of common things that I talk about in my book that he talks about in here, about not trying to time markets. You know, the real power here is compounding. That's what's going to do all the magic for you here, is just leaving your money in there, letting it roll over, letting it compound, keep monitoring it. Buy the best of the best when it comes to index investing, or good quality US companies or Canadian companies, and just sit on your hands. And then spend that time, you can put it in autopilot. Spend your time working on you. You know, I see the stories on these day traders. You know, they spend 6-7 hours a day in front of their computer. The crazy thing with these guys is that most of them can't beat the index every year, and they're doing it full time. Why not just buy the damn index and then spend all that 8 hours a day working on your career? That's what I've always done. I still enjoy, the reason I buy individual stocks and I spend time on my portfolio is because it's a passion of mine. I enjoy doing it, reading about the CEOs and reading the financial statements. But if that, you're not inclined to do that kind of thing, then indexed investing will do everything you're going to need to do. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.